Time now for an in-depth look at the market news, and for that I'm joined on the line by Dr. Sei-wan, professor of economics at Ewha Womans University. Professor Kim, thank you for coming on as always.
Good afternoon, Devin.
So stocks getting hammered again. In Korea, the KOSPI is down more than 3%, a pretty incredible decline these past weeks. What's the story today?
Yes, Korean stock market is experiencing one of the most volatile movements from February, which is the beginning of COVID-19 outbreak. Today, as you said, KOSPI dropped by 3.8% in a single day. In early afternoon, actually, the stock trading has been stopped by Korean Stock Exchange through circuit breaker because stock price decreased more than 5% today temporarily. So Korean stock market and global stock markets collapses were triggered today by WHO's official declaration of COVID-19 as pandemic.
Indeed, and many expect stocks to fall further still on that basis, maybe by quite a bit. What's your view, Professor Kim? Yes,
that is a very much possible scenario. If we take a look at changes of KOSPI from the end of January or the beginning of COVID-19, we see over 1 to even 3% ups and downs almost every day. It means investors became very much jittery over the development of the COVID-19 outbreak. So if the situation worsens over COVID-19, there is a high possibility that the Korean stock market goes down even further.
Right. Well, how big of a factor is this declaration of a pandemic by the WHO? Because, I mean, the virus is doing what it's doing, and we know about that. But there's lots of things going on right now. So, what do you think there?
Well, we are seeing the power of the pandemic of COVID-19 these days, particularly reflected on global stock market. In the case of U.S. stock market, the U.S. S&P dropped over 7% on Monday, and then it rebounded over 5% in the next day. And then on Wednesday, yesterday, it dropped over 5% again. So this is a really crazy market, and almost every market is dominated by that much volatility. So until the coronavirus outbreak is stabilized, we will be experiencing a really volatile stock market all over the world.
Yeah, and it's not just investors getting hit. South Korea's finance minister Hong Nam-gi says the impact on jobs will become clear when the numbers come out for March. What do you think is going to happen with jobs?
Well, actually, in yesterday, employment data of February was released. So it is the first macroeconomic data released after outbreak of COVID-19. So much attention has been paid to employment data of the February in Korea. So according to employment data, employment is overall fine in February. The number of new employment increased by 490,000 on annual basis. This is such a great number compared to last year. And employment rate has been increased up to 66%. But two things should be pointed out on this point. The first is COVID-19's effect is not fully reflected on February's data. So in the March and April's data, we will be seeing much worsened employment and production and income data. And also, by generating temporary jobs for over 60 years old age cohorts up to 570,000, we are seeing that huge increase of the employment, but that has been much added by government's expansionary fiscal policy.
Yeah, and speaking of such policies, the Korean Parliament is reviewing an extra spending bill for the coronavirus worth around $10 billion, but there are now calls for even bigger spending, possibly almost double that amount. Do you see a need for a bigger budget, or what other measures might you suggest?
Yes, economic situation in Korea is worsening quickly. According to survey, sales of airline companies, movie theaters, and tax-free shops has been dropped over 50%. This is almost disaster for these industries. But this year's regular budget size amounts to 513 trillion won, which is the largest in history. And another 11.7 trillion supplementary budget will be added to that regular budget. So I think this amount of budget is not small to draw up efficient expansionary fiscal policy. If we need more budget, we can have another supplementary budget after summer and fall. And to support expansionary fiscal policy, it is important to implement expansionary monetary policy with lower interest rate and more money supply.
Right. We'll be looking for a rate cut if one's coming next month, Professor Kim, but we'll have to leave it there for today. Thanks so much for sharing your insights.
Thank you very much.